And on the panel, we have Peter Wessel, Investment Manager, Borealis Maritime, Elie Fakhoury, who's Senior Managing Director of Teneo, Ali Susanto, Global Co-Head of SSY Finance, Gaurav Mehta, who's Director of Best Oasis Limited, Gaurav Moolwaney, Managing Director, Transportation Finance at Standard Chartered Bank, and we have Tim Coffin, who's Chief Executive Officer of Tristar Eships. Leading the discussion, Chris Peters. Chris, please.
Okay, good afternoon all. We have the graveyard shift here, so I hope we've still got good attendance, which is very good. So I'll just do a quick introduction. Most of you probably know me from my previous position as the CEO of Tristar, which has kindly been taken by Tim, who's on the panel, so I can give him some good abuse as we go along today. He's asked me to have a competitive fight and keep this interesting. I'll just give a quick overview of Montfort, because we're a newly established company. We're only 3 years old, but for the previous panel, we do have 3 years audited financials now. We're a trader. We got 6 billion in revenues last year, and we trade everything across the barrel and dry bulk. We bought the refinery in Fujairah last year, 65,000 barrels a day, so we have a good trade across the business. I'll skip across this one, but we will be establishing a regulated fund for shipping in the Middle East. Those of you that know me, when I do a speech, I always use cartoons, so I'm going to flash a couple up and then move into the usual conversation with the panel. So we can talk about finance, ESG, and also alternative fuels, and now I'll sit down and hopefully entertain you with the guys. Can we turn? Yeah. So I'm going to make a few notes from this morning. It was interesting. Very good to see Doug Finland is still here, because he put up, Watson Farley did a speech, those of you that saw this morning. And on their slide 10, they had alternative fuels. On those alternative fuels at the end, Doug Finn, he said, which of these ship owners are living in fantasy land? Because there were so many different fuels on there, which I will come to as part of our speech. This bit these guys don't know about. We had a preparatory call last week, and unfortunately I've got some questions from today, which we've not had time to discuss. It was also interesting to note the dry bulk panel earlier, because we had 3 dry bulk owners who had 3 different opinions. One thought the market was going to spike by 30%. One was fairly balanced and one was quite bearish. So again, even within the same industry, in the same market, we had a difference of opinion on where we are in the market. Now, Kevin has already introduced our panel, and we're basically talking about running a shipping business when there are so many unsure variables. So we'll start with, on this topic in the region, from an investor perspective, in the current market, and particularly tankers, because we had a dry bulk panel this morning, we have vessels that are now being sold in the market that are 10 years old for close to $40 million, when we all know that their new build price was close to $30 million. So with this environment, I'll start with Petter. How is this impacting your investment decisions when you're looking at buying second-hand vessels?
Yeah, so the way the current market environment impacts our investment decisions is that it generally pulls us towards less crowded segments of the industry and generally towards mid-age tonnage. It also pulls us away from more speculative and opportunistic asset plays and more towards the structured investment side. So medium to long-term time charters, say leasebacks on bareboat bases, etc. So we feel we're in a market environment now where people are generally quite positive, capital is abound, and order books across many segments are historically low. So there is some sense of, this time it's different, and it can be a tough environment to deploy capital in. So sometimes we find it difficult to justify asset prices. We are fortunate enough to be able to look across all segments of shipping and offshore and across asset life cycles. And there definitely are opportunities out there. We just have to keep turning stones to find the right ones for us. And we have dry powder of upwards of $1 billion, so we're turning a lot of stones. And especially in this side of this part of the world, we have strong presence and good relationships. So.
Very good. So turning to Tim, Tristar Eships has historically done many new buildings. Now with current new building this morning on the dry bulk panel, they were saying that a Kamsarmax in Japan has just been ordered at $42 million for a new build Kamsarmax. We know that for MR tankers, as an example, in China, you can probably get a conventional non-dual fuel, so a very bog standard IMO 2-3 vessel for 43-ish million, and Hyundai Mipo offered 6 2026 Q1 slots this week, but they want a number starting with a 5. As someone who has done many new build vessels over the years, how do you renew your fleet with these prices in this environment?
Well, I have lots of ships to sell, if anyone would like them. We don't really pay attention to the day-to-day market. I mean, we're long-term players. We lock up our ships for as long as possible. I think it's Ben Franklin who said that the only two things that are true in life are death and taxes. Is this one working? How's that? Is that better? No? It's okay. Yeah? Is that better? I think it's Ben Franklin who said that there are only two truths in life, which are death and taxes. And shipping has an analog in that we know that our ships will one day get beached, and that the taxes part is the inherent volatility in our market. And so, I guess the topic is more or less how do we deal with volatility or uncertainty or whatever you want to call it. That volatility is a fundamental inefficiency in our industry that we have some tools to eliminate through FFAs or long-term period contracts or what have you. But I think it's Numa earlier who said that the key is to buy it at the right price, and that really is the key. To enter a trade at the wrong price, you suffer for the rest of your life. And why? None of us are. I don't have time for that, and nor do most other people, I think. So I think that locking into today's new building prices is frankly a fool's errand. There will be days when you look smart, and you of course you have the advantage today to also lock into a very high period charter rate. And if you're doing so with a first-class counterparty, then you can sleep reasonably well at night. But you still, over the life of that vessel, you have a book value problem, you have a residual value problem, you are in a trap that you cannot escape because one day you'll look like a fool. Now, one day you'll also look very smart. And so, as always in this game, the key is to be patient and have available capital so that you can survive. And that also that's the best hedge against the fundamental market of inefficiency that is volatility.
Thank you. So, Elie, you're advising many clients in the market at the moment. So, leading on from Tim's comments, how are you advising clients in this high-price environment and how to deal with the current situation?
Oh, thanks. So I think there's several factors, right? So you have, as we heard in one of the earlier panels, there's less and less potential financiers. So the available supply of financing is obviously lower today as well. In addition to obviously the tough interest rate environment that you need to deal with, combined with some of the supply dynamics that we've been discussing now. So taking all of this together, it's getting increasingly challenging. But that also means that there's more kind of peculiar analysis which needs to be done around the quality of the vessel that you're buying, around the potential for refurbishment, around as well any sort of transparency issues which may be required from the seller and so forth. All of these issues are coming to the forefront as being more important, and so we're seeing increasing covenants that try to address some of those, I think, in the financings we're looking at.
Okay, so I'm going to come to you, Gaurav, as a banker, and I'm just going to pick up. This is a ad hoc, unprepared question based on the interest environment. Yes, it's high right now, but it's not really, is it? I mean, most of us on this panel are old enough to remember. Now, at the moment, yes, we have margins that are 3% plus, depending on client basis, and SOFR, yes, it is up at 5+%. But it's going to come down. If I say my 30 plus years in the industry, on average, bank debt is 6 to 7%, plus minus 1, and it's never changed. Everyone talks about high interest. So as a banker, can you give your opinion on interest rates here? Because my view is interest rates have never changed. There's a variance, but they've not changed. Even when we had a LIBOR of 0, the margins went up.
Yeah, no, I think, Chris, you're right. We've seen almost a switch between base rate and margins, right? So we have seen, as you said, if somebody asks me on a 10, 15, 20-year project what interest rate assumption to use, I'd just say use 6 to 7%, because between base rate and margin, we've had that sort of mix. Having said that, I think we also have to acknowledge that for many years, we did all, I mean, professionally, personally, enjoy a very low interest rate environment, with base rates were 0 or close to 0. And you were in the sort of the early singles, but that has been proven to be something that will not last. Now, yes, obviously everybody's talking about the rates will come down. The forward curves all seem to indicate that. But again, nobody's looking at these rates to sort of go back to the levels that we saw for this period in the middle. So, yeah, I would say if you're making a business case, 6 to 7% is an assumption. I would also add, and we were talking about asset prices, we're talking about freight rates. If your business case goes from black to red, with toggling your interest rate margin between 5 and 9%, then you should revisit your business case, right? Because that number is moving you from one side of the balance sheet to the other, then have a rethink about all the other variables that you're assuming.
Great. So I'll stay with you because I'll come back on topic about running a business. As ship owners, with the current high prices that we're talking about, what type of leverage are, and I'm not specifically asking Standard Chartered here, I'm thinking more of the banking market in general, what type of leverage is now available to borrowers from the traditional banks? I'm not talking JOCOs, I'm not talking Chinese leasing, I'm talking the traditional European lenders.
Okay, that's very specific. I was going to say leverage is always available at a price. For most banks, before I give a number, I'm just going to say, we talked about high asset values, we talk about LTVs. From our perspective, and I'm not trying to give a cliched answer, the most important thing still remains client selection, right? So I'm not saying I'm asset agnostic, I'm not saying I'm indifferent to asset prices, but you have to, as a bank, most importantly look at the type of clients you're doing business with. It's a volatile industry. You need the client to be able to have the pedigree and the balance sheet to withstand the volatility that's going to come, right? So high asset prices is not necessarily a reason to say yes or no. You just have to make sure that you're choosing the counterparty that's going to be able to withstand the cycle 5-7 years from now should things change. In terms of leverage itself, I think what we have seen is we have seen lower amounts of leverage being asked, right? So if I had to put a number out there, and I'm not saying this is our preferred number, but we're seeing a lot of 50 to 60% asks in the market, which works well if you talk about a high asset value, because then on a sort of a mathematical basis, you're not over leveraging. And it is also a function of the fact that most ship owners across all sectors in the last 2 or 3 years have done quite well, right? So they are not chasing leverage. And I think that seems to just work quite well for us because, I'm happy to do 50 to 60% or whatever the lower leverage is, just lower risk.
Okay, thank you. Now, I'll come to the other Gaurav and Elie, and we can decide how we move forward on this one. This is the difficult question in the room with the many disruptions that we have going on in the market with price cap oil, with the Red Sea, with the Panama Canal, with the Black Sea. How do these socio-economic, political dimensions impact the ship owner in the current market? Elie looks as though he'd like to go first.
Yeah. Interesting. I would touch something I would say quite sensitive. For those who attended this Marine Money last year, there was a question from one of the very experienced lawyer about decarbonization and who will finance it. And the question last time also with the last question is, do we want beholden to China? If we expect the Chinese lender or Chinese lessor to finance or to drive the decarbonization. Since then, I would say we have met more companies or more financiers which basically taken into consideration this political issue into their business decision. I give you an example. Last year, we are arranging basically an ECA-backed financing. And in that process, basically, during the selection of the bank, the one that issue the guarantee basically refused to work with certain banks from certain country. What happened is it's quite interesting because the working group looks to be very fine, working very well, then proposed it to the boss, and the boss rejected basically with a simple reason: the bank. The other bank basically come from the country that they do not want to do business with. That is not the end of it. We have seen also certain financiers refuse to finance certain company if it's based on certain country. I'm talking about non-sanctioned country, the country that are doing very well to each other. And lastly, we were on business trip to certain country, right? And the interesting, I would say, from the clients that we met, 30-40% probably say that we do not want financing from certain country, but we want to focus on the other. And it is not purely, I can understand it's based on the recently was touched also by Iraklis also, right, about the diversification of the financier, which I can fully understand. But the reason is mainly purely based on the political reason. So I would say that I would have thought initially the color of the money is the same, but it looks like now the worlds are getting more polarized. And yeah, adding all the issues we are seeing now, I think it would be much more complicated in the future, especially for the ship owner. Thank you.
Hi guys. So I think that whenever there is an issue in the world or due to socio or democratic issues, we see that there's always an opportunity for a ship owner. So this is when they really enjoy the benefits in the market. And as you know, with the Red Sea ongoing, we see we are more on the MR side, on the tanker front. So when we see these things happening, and I try to keep my ships as much as possible on spot. So these kind of matters is the time when owners enjoy. But on terms of the financing of these assets, when we are on spot, doing spot business, it becomes very difficult to get financing from the banks. And if we are considering, say, half on TC and half on spot, this also makes good sense for the financiers and also for the owners because you have a good cash flow in place. So this is what I think, but unfortunately, with these crises ongoing, it is also being borne by the people on the ground, which is quite sad. But as an owner, it's some of these times that we enjoy the highest earning.
Okay, thank you. And Peter, do you want to come in on how you guys are handling this with your vessels in the environment?
Well, so we're ramping up a new strategy, and the strategy, as I said, is more focused on structured investments. We have a vessel on TC. we're not enjoying the spike in rates, but we can take comfort in more secure cash flows. So in terms of how that affects our business today, there is a certain spike in asset prices, which again, as we touched upon, makes it a little bit harder to look at certain assets.
Okay, Tim, do you want to say anything, or I'll move on?
Yeah, our job. Look, everybody in this room has the same job. Our job is to facilitate and enable world trade, and we do that in some cases by financing it, in some cases by operating ships. There are some subtleties in there. In some cases, you can't do business with this guy or that guy, but ultimately our job is to enable world trade. And to the extent that we make decisions that are contrary to that goal, we're failing in our job. To put it very succinctly.
Okay, I'll come back to the European market on finance. I know the previous panel were talking, but we didn't get too much on the Poseidon principles and how that's impacting ship owners. When you're running a business, if you want to, I'm not going to go down the eco route, but the Poseidon principles, all of the European banks, we have marine money in London. There was an entire banking panel that consisted of only Poseidon principal banks. They didn't discuss anything else, and there were no alternatives. They did recognise there were things outside of London and Europe, but for a Middle East owner, so I'll come to Gaurav Mehta first. For a Middle East owner, do you even consider looking at the Poseidon principal banks and how that impacts on your business?
Yes, for sure, we have to look into it because from my side, we are also into ship recycling. So one of the matters of Poseidon Principle is about recycling their asset in a Hong Kong Convention compliant facility with RSRS in place. All my 4 yards which I have in Alang are all RSRS certified recycling yards. So in principle, because when I have different businesses to take care of, so it becomes an important issue for us as well. So we do take into account what is happening on the Poseidon side, but as my fleet is a little on not a very young fleet, so also it matters that the financing which comes for us on our fleet side is mostly from the Far East side of the world, instead of the European side, where on the Far East you don't see too many banks still being under the Poseidon rules. Yeah.
And Elie, how do you see advising clients at the moment between Middle East and Elie as well as a broker, when you're broking finance, the two of you, how are you comparing the markets here compared to Europe and the Poseidon principles, the green issue, when it comes to finance?
I think, first of all, it's a much deeper pool of liquidity. And I think that certainly makes a difference when you're looking at the available opportunities. So it affects the type of structures that you can look at. For example, in Europe, there's ECA-based financing and so forth, whereas here it's basically traditional lending, although there are some private credit opportunities which are becoming more prevalent in the market as well. So I think the range of opportunities, I think, is much more broad.
Elie, you want to add?
Yep. I would say now the Poseidon Principle, the weak banks, a very good initiative. But like we mentioned also, that is actually available. There are pockets of liquidity that are available for all types of capital, all types of assets, including the older vessels. In addition to leasing company, just now the earlier panel discussed about that. Actually, we see the one that the other pockets that are going very strong in the past 1 year or 2 years is the Japanese JOLCO, JOL. It provides a lot of liquidity, and also certain regional bank. And this JOLCO financier and the regional banks, they are not even care or even heard of the Poseidon Principle, basically. So I would say there are still some banks that are lagging behind all these good initiatives. But at the same time, also with the Poseidon Principle, maybe Gaurav can advise also what kind of saving, for example, if you are finance a ship owner which is on compliant with all the green ESG initiative. What kind of saving can that ship owners get? It won't be a lot, isn't it? But happy to listen.
So,
Yeah. So Gaurav, Gaurav, as a Poseidon principal signatory and lender, what benefit does that give to the borrower?
So, but leading from what Ali said earlier, I fully acknowledge that there are pockets of liquidity that care less today. But I think from a ship owner's perspective, you have to start thinking about transition and decarbonization, right? Burying your head in the sand is a very short-term measure. So the world is evolving. Banks and financiers will catch up. So that is one thing that Poseidon is one example, right? But you have to start sort of thinking more long-term. Now, to answer your more pointed question around Poseidon and what benefits it brings, the very simple answer is that Poseidon is becoming more and more important in our decision-making. And 1 or 2 years ago, we had one of the marine money panels, and we had this discussion. We said we are collecting data. All the banks are. Most banks have now processed sort of 2 years of data. We've published 2 years of reports now. We are analyzing this. And maybe 2 years ago to where we are today, the decision-making is becoming more and more based on the output that we are starting to see from Poseidon. So the benefit, I think, over time is going to be, and I spoke about client selection earlier, is going to start going into vessel selection. So it may not be about the 5 basis saving. It could become more binary into whether you choose to finance a certain type of vessel or you choose to finance a certain type of client base if the boxes are not getting ticked in the right manner.
So you're saying it's not a case of a benefit to the owner, it's a case of can you get finance?
We could be trending in that direction.
Okay. And sorry, other Gaurav, I cut you off, but did you have something to come in on?
What we see on also on the recycling side of the things is that none of the banks who are part of the Poseidon want to come and finance the ship recycling sector when they are going to be talking about being driven by these things. They also have to see what is going to happen on the end of the life of the asset. So when no banks are ready to look into this Poseidon principles when they have agreed on certain things, means we don't see too much happening on that front. And on the ship owning side, because I'm still learning this thing, so I'm not able to give you a real proper answer on that.
Okay, so I'm going to ask Tim a question, and
Can I respond to that?
it's related. When I sat in your chair and took out Poseidon principal loans, at the end of 2021, I submitted to my Poseidon principal banks all of the data. And they submitted on something like January the 15th, 2022. They asked me what I'd given them. Has that changed?
No, but I think it's important also, though, to recognize that the greenest, most ecologically sound ship out there is the one that's already been built. We can sit around talking about financing, all these new builds. The amount of carbon emissions from the process of constructing and demolishing a ship is greater than the amount that the ship will ever emit, regardless of what it burns. And so I think we need to take a step back and be a little bit more realistic about what we're actually trying to do, right? Is it just politics and performative, or are we actually trying to do the right thing for the environment? And I would suggest that we all have an obligation to do the right thing for the environment. In our case, I think we're probably the first people to put, a small amount of money, but we're building a battery-powered bunker barge for our bunkering fleet. And we're very excited about it because it does move the dial, depending, of course, where the electricity comes from. If it comes from a coal-fired power plant, then it's a coal-fired ship. And that's maybe not really where we want to be. But in the longer term, we're trying to do the right thing. And I think, and we know that the energy transition will evolve such that we're being effective in that endeavor. So I think the Poseidon principles are certainly the right sort of direction, but a little bit like CII and various other, some of the other acronyms, they're not necessarily the perfect solution to what we're all trying to do. The greenest ship is the one that's already afloat. It's a simple fact. If we can keep existing ships going for 10 years longer, we really move the dial. And we're not going to move the dial because we're financing things in slightly different ways.
So if we talk about tankers, then basically a tanker that gets to 15 years of age, you need DCAP 1 to trade with the oil majors. So that doesn't just involve the Poseidon Principal banks and the owners. You now need to start talking to all of the oil majors. I'm not sure we have any in the room, but are you going to convince an oil major to keep a ship until 20 years of age, let alone 25 years of age, to achieve that?
At today's freight rates, yes, you will, because they'll do everything they can to drive them down. They don't know it yet, but they will.
Good luck. Okay, I want to come back to the dry bulk panel this morning, and this applies across many segments, but specifically this morning, the dry bulk guys stipulated that by 2026, 40% of the dry bulk fleet will be older than 15 years of age. Now, across tankers, there's slightly different depending on the segment, but as a panel, so I think we're running close-ish on time. We have 5 minutes. So I think we'll just put it across the board. We do have fleet renewal, which people want for eco reasons. Tim has just put forward a good argument for keeping ships on the water for longer. The dry bulk panel this morning said that in a couple of years' time, we have 40% of the dry bulk fleet above 15 years of age. So I think Tim can go last again because he just had his penny's worth on this, so I'll start down with Elie. But I'd just like to get an opinion for, as a ship owner, what do you think is the right way to move forward over the next few years with your existing fleet and fleet renewal? And if you want to give input on how the whole community, whether it's the bankers, the insurers, and whatever, can help in that.
Yeah. I would say it is a very difficult situation because we all know if you build a vessel at the wrong cycle, it will burden you for a long time, right? So from the few deals that we have seen that bonds to us, basically, whether we want to build now, I would say the unfortunate thing, what we have seen, if you buy the vessel with a bit of conventional design, and if you compare it to you build dual fuel or whatever, the charter rate that you get does not really compensate the additional premium that you pay for the new building, which is still, if for the certain ship owner with strong balance sheet, then you can argue the residual might be higher, but we all do not know like what will happen 5 years, 6 years, 10 years down the road. Maybe the fuel choice will change also, right? So I would say it would be very risky to invest now, considering the current high price and the rate that you can get. Personally, I would suggest to postpone the investment for the next few years.
Okay, Elie?
Nothing really to add there other than to say that postponing that investment obviously could have its fair share of challenges as well in terms of cash flows. So those need to be carefully managed, I think, in that context.
Unless anyone else wants to add, maybe we can open the floor to questions, unless anyone wants to. Do we have any questions out there? Or are we going for drinks?
Any questions, please? Yep, Harish.
What's the number one risk you have that keeps you up at night in your mind?
Oil spills. Look, nobody has a crystal ball, right? And so we don't know which way the market's going. So you can't get worried about the market falling apart or getting too expensive or whatever. That's a fool's errand. So as an owner and as operator, the risk that I carry is primarily operational because it's the only risk I can control. And so if I can't control it, I've got a problem, right? That's the issue. Everything else is theological, right?
Okay. Anyone else? Sleepless nights? Gaurav, do you have sleepless nights?
Too deep an answer for me to add.
Okay. Another question? Final question, perhaps? No. Okay. Just one right across the board. Yeah, we're going to be here. We're going to be back here a year from now. Where are we going to be? I mean, do you think we're still going to be at this juncture where everything's so expensive we don't know what to do? Is anything going to change? Elie, from just like 30 seconds, where are we going to be in a year?
I would say still there are companies that are willing to invest because there are so much liquidity in the industry, and the interest, I think, from the several investors to invest in shipping is getting stronger. Yeah. So I would expect that is still continued investment in this shipping in general.
Okay. Elie, in a year, where will we be?
I think in a similarly, if not more volatile environment than we are now.
More volatile. Gaurav?
I think the markets may remain in these status for another 1 or 2 years. Asset prices should also remain quite buoyant during this phase.
Okay. Peter?
As an investor, I hate to be put on the spot in front of cameras, but look, the best remedy against high prices are high prices. Let's see.
Okay. Gaurav?
No crystal ball, but I'm going to wish that we all enjoy the good markets that we are, and everybody's making money and everybody's happy.
Okay, fair enough. Tim?
I think that's a very good answer, actually. Hopefully a year from now we'll be here and talking about how our good fortune has continued. And that would be a pretty good result for us all, I think.
Last word from Chris?
I'm an optimist, so the Panama Canal is going to be full. All the wars will have finished. Asset prices will have come down. We don't have the lottery here.